So, welcome to Chapter 7. We're going to spend this chapter talking about payroll and payroll taxes and really just the beginning of this entire payroll process. Now, certainly, payroll is a big, important, really huge component of a business's, a company's accounting process. I would encourage you, unless you are a dedicated, trained payroll accountant, that you should, if you're just starting your business, if you're a small business person, you really want to hire out your payroll. There's a lot of laws that can be complicated, that change quite often, and payroll is not something you want to mess up. Not only for your employees do you not want to mess it up, but there's a lot of penalties that you can be hit with if you mess it up. And it's really easy to mess it up. As someone who's done payroll before, let me tell you, it's really easy to mess it up. And I'm a trained CPA. Um, so we do offer a payroll class here at TCC. I don't normally teach it, but we do offer it. And so if this is something that you really do want to do, you want to be a payroll accountant, I would encourage you to take that class. I would encourage you to seek that certification. There's a special certification that goes along with that. But I wouldn't advise anyone to just jump in and start doing payroll on their own. You can usually, there are payroll firms that do this. They usually do it relatively cheaply. Certainly the cost of paying the payroll firm is much less than the fees you would have to pay if you were to screw it up. So we're going to talk very generally about payroll here. This is not intended to be a lesson to teach you where you will come out of this, one chapter being a payroll expert and know how to do it. So we're going to talk about it kind of more in general terms here. So remember, this is again just a useful process, a useful tool when we're calculating payroll. We need to calculate the employee's gross earnings, their withholding taxes, and then that gives us their net pay. Their net pay will be reported, their gross and net pay will be reported on payroll forms W-2 and W-3, and as well as we're going to report those on a 941 and a 940 EZ. And then we have to calculate our portion of the payroll taxes. Yes, we as the business have to pay payroll taxes. We have to record all that and post it to the appropriate accounts and then actually write the checks and pay the employees. So payroll again has to be accurate. If there are any mistakes, not only is it bad for your employees if you've paid them the wrong amount, but you yourself will face a lot of fees, fines and fees. It's also important, there's a lot of deadlines. Certainly your employees want to be paid on time, but you yourself will have a lot of deadlines with state and federal government agencies that you have to make certain deposits by, of the payroll taxes and the payroll withholdings. And so again, if you mess those up, there's a lot of fees and fines to be on that. And then certainly we need to keep all of this information confidential. So when we talk about payroll terms, so employees are anyone who works for us. They can be hourly employees or they can be salaried employees. Now, contract employees are a little bit different. So if you have people who work for you as contractors, you don't withhold the payroll taxes from them. We're not really going to get into contractors here, but let me just say that there are only very specific circumstances that someone can be considered a contractor. So I know that it's kind of tempting and common sometimes for businesses, especially small businesses, to say, I'm not going to classify these people as employees. I'm going to classify them as contractors. Then I don't have to mess with the payroll taxes. But if they don't meet all of the circumstances for being classified as a contractor, then again, you can get in trouble and face a lot of fines and fees for that. So a pay period can start any day of the week and has to end after a certain period of time. You can set it. You can say, I'm going to pay my employees every week, every 2 weeks, twice a month, once a month, whatever it is, but you have to specify it. So again, it can be daily, weekly, bi-weekly, semi-monthly. Bi-weekly is every 2 weeks, where semi-monthly is twice a month. Those are not the same things. There's not exactly 4 months and 4 weeks in every month. So keep that in mind. There's a difference there. There's 52 weeks in a year, but 12 months, that would, if there's 4 weeks in a month, and that only totals 48 weeks. So there's a difference there. You can use different pay periods for different groups. So, for example, you may pay hourly employees every 2 weeks, and maybe you pay salaried employees once a month. But everybody within that category has to be paid the same time. So gross earnings is the pay that the employee earns before anything is withheld. So if it's a salaried employee, this is their salary per pay period. If it is a hourly employee, this is the number of hours they worked multiplied during that pay period multiplied by their hourly rate. There are state and federal laws that govern overtime earnings. Typically, overtime is time and a half. So for any hours worked over 40, you have to pay time and a half. So if someone makes $10 an hour, for every hour they work over 40, they would make $15 an hour, for example. A work week, if you consider it that way, is a 168-hour period, a 7-day work week. So you can consider if they work more than 168 hours in a 7-day period, there are rules regarding their overtime. So for a bi-weekly pay period, this means every 2 weeks. Here we have a person who worked 44 hours in week 1 and 38 hours in week 2. So for week 1, they'll get paid their regular rate for the first 40 hours, and then they'll get overtime for the next 4. For the second week, they'll get paid just 38 hours at their regular rate. Now notice that in total, they worked 82 hours. So that seems like it's only 2 hours over the limit, but it's determined per week. So they're still going to get 4 hours of overtime because in that first week, they worked 40 hours. Doesn't matter that they worked less than 40 in the second week. So if the pay rate is 11.40 for 84 hours with 4 hours of overtime, there's different ways that you can calculate this. We could say that, all right, their regular rate is 11.40 and their overtime rate, which is 11.40 multiplied by 1.5, is 17.10. So we could multiply their 78 regular hours, so that's the 40 in week 1 plus the 38 in week 2, by 11.40, and then the 4 hours of overtime by 17.10, and add those up, and their gross earnings are 957.60. A second way that we could calculate that is by multiplying their all 82 hours by the 11.40 by the regular rate, and then you multiply the 4 hours of overtime by a half rate. So half of 11.40 is 570. We can multiply just their 4 hours of overtime by that half rate. It comes out to the same way. It's just kind of whichever way makes the most sense in your head. I tend to prefer part number 1 up here. This tends to make the most sense in my head, but whichever way works best for you. Now, there are several things that are required to be withheld out of the employee's paycheck. Whenever you have an employee that is hired, they will fill out what's called a W-4, and that W-4 is what you as the employer, use to determine how much money gets withheld out of the employee's paycheck. Now, your employees can redo their W-4 at any point in time. You, as an employee, can redo your W-4 at any point in time. I just redid my W-4 and my husband's W-4 this year. I'm recording this here in 2020 because of some of the tax law changes. We weren't having enough money withheld out of our paychecks, and we had a huge tax bill we had to pay come tax season, and I went, whoa, we gotta go back and redo our W-4. If you have any major life event change, you should definitely go back and do your W-4. So you get married, you get divorced, you have a child that ages out that's no longer a dependent, anything like that, you need to go back and redo your W-4. Now, whatever the W-4 says is what you have to withhold as the employer. You don't have an option of doing something different. So here's a sample W-4 from one of our employees, Stephanie. And so she's put in her social security number and her address. She's told us that she is single and she only has one allowance. And so that's going to dictate how much we withhold from her paycheck. So the withholding is determined by your marital status, pardon me, are you single or married? Your number of allowances claimed, and this goes up as you have children. It goes down as you have children that are not dependents. It's also determined by your gross pay and your pay period length. Now, again, if you're wanting to determine the amounts that are being withheld, you can look at the employer's tax guide. These do get updated every year, so make sure that you get a new one every single year. Again, a very common mistake is to use last year's tax tables or use the wrong year's tax tables, and that they change, so you don't want to do that. So here's a sample one. This is for single people that have a bi-weekly pay period, which is what Stephanie was. So we are going to look over on the left and we'll find her wages, what category her wages are, and then we'll come over to one allowance, which is what Stephanie said that she got, and that'll determine how much we withhold. Now, there are states that do charge a state income tax. Texas is not one of those, but many states do. And so if you're in a state that charges a state income tax, you'll have to calculate the withholdings for that also. And those are different than the federal level. There are cities and counties that also tax employee earnings. So again, there's local laws. Obviously, we can't go into all of those here because I don't know where you are, but you should definitely pay attention to that. And again, this is another good reason to have a payroll company do your payroll for you because that's what they're the expert at. Now, not only do you have to withhold federal income tax, but you would have to withhold Social Security taxes as well. So Social Security taxes are part of the 1935 federal law called the Federal Insurance Contribution Act, which is where we get the acronym FICA from. Again, you are required to withhold this money from your employees. There are certain exempt employees or exempt industries that don't withhold Social Security tax, but that's not the norm. So Social Security payments are not put into a fund to fund you later. If you are having Social Security withheld out of your paycheck, it's being used right now to help pay, to give money to retired people, to people who are disabled, to people who have had members of their family, a husband, a spouse, a parent, if they're a minor, that are deceased, and it's helping with that. It also helps pay for medical benefits, so Medicare comes out of this FICA Act as well. So really, the Social Security tax is two taxes. It's the OASDI, Old Age Survivors Disability Insurance. That's what we commonly call Social Security. And then it's Medicare. So both of these are considered FICA. You may see them on your pay stub combined together, just listed as FICA. You may see them listed separately out. However, your employer chooses to do it, but they are withholding actually for both Social Security and Medicare. Now, for Social Security or the OASDI, there is a limit on the amount of tax that an employee pays. Again, this limit changes every year, but currently I believe you're only taxed on the first $123,000 that you make. So if you make over $123,000, first of all, good for you. Second of all, then you stop paying Social Security once you've hit that 123,000 mark. Medicare is taxed on all of your earnings regardless of how much you make. Interesting tidbit, Bill Gates hits his Social Security tax limit by January 3rd. And Jeff, I can never say his name correctly. Is it Bezos, who owns Amazon? He hits his Social Security tax limit by 11 a.m. on January 1st. All right, so as of 2020, and again, these rates change every year. Oh, I lied. The Social Security tax limit is 137,700. I was mistaken. So currently the tax rate for Social Security is 12.4%. That is split between the employees and the employers. So you, as the employee, have 6.2% of your first 137,700 withheld out of your paycheck. The other 6.2% comes out of your employer's pocket. So if you're the employer, know that on top of your employee's gross pay, you're also going to have to pay 6.2% in Social Security tax. The same applies to Medicare. It's really 2.9% split evenly between employees and employers. So 1.45% comes out of the employer's paycheck, and the other 1.45% comes out of the employer's pocket. Now, other withholdings, you could withhold money for medical insurance, for maybe a savings plan, disability insurance, union dues, charitable contributions. Those are all what we call optional withholdings. So here's a calculation of an employee's net pay. So we can see their gross earnings. We can see how much they had deducted for federal income tax, state income tax, their OASDI, their Social Security tax, their Medicare tax, and their medical insurance. So the difference between their gross pay and their deductions gives us this net pay. This is what we call take-home pay. This is the amount that their actual paycheck is for. So they're going to get a paycheck for $685.73, even though they earned $957.60 this pay period.